Hi guys, good evening. Can you all see me? The screen, and can you hear me? I don't see any chat as such. Let me try and open the chat. Okay, you can hear me, right? That's good. That should be good. Hi, Kajendra. Just give me 1 second. I'll set up everything. All right, guys. We still have 1 minute. I think I'm all set. I can get started in a few minutes, and then so. Right now, this is dollar index. I'm gonna remove this, and this from it. Let me just check on my studies. All right, so let's get started. So guys, this is dollar. This is what defines US. Now, what is happening with dollar is it's getting sold. It's getting sold because somebody in TLT, this is the bond price. Again, I will explain you what the bond prices and yields are, how they relate to each other. It was supposed to be inverted head and shoulders, but then we had some massive pushback. Now, the dollar prices are going down, the yields are rising, and the bond prices are going down. Let's just take 1 minute to explain you all what the bond and yields are, how they are related, and then I can talk about the other stuff because I want you to understand what the bonds are. So bond is like a document which has a annual payment. I'm just giving you a very simple example of a bond, which is like the in payment on it, which is called as coupon. There are multiple flavors of coupon, but right now I'm only going to talk about fixed price coupon. Otherwise, there are zero coupon, like there are multiple coupons which are involved. So this is the bond which has a dollar price against which there is a coupon, which is the annual fixed payment, and there is a interest which is called as yield. Okay. So this fixed price coupon is defined when you're buying the bond. Okay. So let's say Naval has interested or has interest in buying a bond from government. This bond was, let's say, $100 and has a coupon of 50, or $1,000 had a coupon of 50 at the end of year. So when I'm buying $1,000 and 50 is the payment, this is the initial very first time. It means I am paying 5% interest on this, okay, annually. Now, if again, I'm just trying to explain from a very simple layman's perspective. So if there is a good demand for bonds, like when These are the two scenarios. Just keep in mind when QE comes, when Fed comes and buy the bonds, what happens? They try to buy this. So the demand of 1,000 bond increases. So the price goes to, let's maybe 1,100, or I'll just make it 1,250. Okay. But the amount of coupon is still 50 because this is a fixed coupon. What it does is it reduces. Now 50 for 1,250 is not 5%, it's 4%. So the yields, this is yield, this is bond price, this is the coupon. So whenever there is a demand like QE, the bond prices goes higher. When it goes to, let's say, 1,500, the coupon price is still 50, and this is like 3%. So in simple and layman terms, whenever the bond price goes higher, the yield is coming down. Yields represent the risk in the economy. So whenever somebody buys the bond like Fed, they buy the bond, increase the price of the bond, the yield goes down. Now, what is happening right now is both Japan, which has approximately $1.1 trillion of US bonds, they are the holders of this bond. China, about 760 billion roughly. Then there are many other countries which hold big chunks. Germany also has, India has about 220 billion. So, but these two, three countries are the biggest ones. The bond is for 10 years. So over a period of 10 years, the payment is increased. So just keep that in mind. I did not uh, took that into consideration. But if you want to be ignoring the time frame, then this becomes 0.5%, 0.4%, and 0.3%. The bonds also have a period of 10 years, 5 years. So 10 years, you keep on receiving the payments. Okay, so let's keep it simple. Ignore the years. Let's take the bond for 1 year. Usually the bonds are for 10 years, 30 years, 50 years. All right. They are 1 year bonds, but they are called totally different instruments. So for a 1 year bond, assuming this is what we have. Now, what China is doing is that they are the holders of this bond. So what they're doing instead of improving the supply, they are the supply. They are selling the bonds, which is reducing the price. So let's say if $1,000 bond, now they are selling, it is reducing it to 800. What will happen? The price of yield, which is zero point 0.3 here, it will become like uh, 800 by uh, 50, about 7-8%, 0.08%. So roughly this is the number which will come. So this goes higher. It means the yields have gone higher. When they keep on selling the price of the bond, which is like TLT, which you are common with, TLT goes down and the yields will go higher if you do the calculations, all of that. So once you are in that mode, this has a negative impact on the currency. Because when the yields go higher, it means the currency is getting weakened. Now, sometimes what happens is when Fed buys, it buys and it increases demand, it strengthens the dollar. When the dollar is strong, because now the demand is coming. The demand is coming, the dollar gets strengthened. The strength of the dollar helps the market. And there's a good amount of liquidity which comes into the market because now Fed is buying this and $1,250 are coming into the market. But when somebody is selling the bonds, the liquidity is taken out from the market. Somebody has to give them back $1,000. Okay. Now, when you get that $1,000 back, somebody has to sell some kind of assets Let me just clear this up. Someone has to sell the assets to withdraw that liquidity. So imagine now Japan, let's say they had a $10,000 bond, which was running at point 0.1. I'll not go in points. Let's keep it simple, 5%. Okay. Now, all of a sudden, they keep on selling. They were the holders of this. And the market rate was, let's say, 11,000 for one. They were in profit, so they want to sell it. The moment they sell it, the price will come down because now the sellers are coming. There may be less buyers who wants to buy. So when there is less demand, the interest rate will go higher. As I showed you an example. Now, if there is so much of supply, the price of the bonds will go down to maybe 9,500, and this may go to maybe 5.5, 5.6. So all of a sudden, when you see the yields going higher, it means the risk in the country, risk in the economy, risk in the US is getting more and more. When the risk is more, there is less demand to buy the bond issued by the government. Bond is a fixed income asset class, which we call as money market class, where you buy a bond and in return you get a dollar amount, which is called as coupon, which I just explained. So now when the risk is higher, the interest rate is higher. Or in simple terms, very, very layman terms, if you know a business, if you know someone, you can lend them money at a very nominal interest, maybe not even an interest. But if you do not know somebody and if you know somebody who has a bad background, you would like to have a higher interest rate so that at least you're getting some piece of your payment back in terms of interest, right? So higher the interest rate, higher is the risk. Lower the interest rate, lower is the risk. So right now, Japan, if starts to sell, the risk will go higher, which will weaken the dollar. So dollar has come down from 104 to almost 100 this time. The day low was 99.70. When the dollar falls, what happens is, again, this is pure economics. See, let's say this is China and this is USA. Now they want to buy, let's say, a toy. Okay, it was made of maybe I don't know how to put uh, Chinese yuan. Let's say yuan 100, and the rate of conversion is again I have to make up that uh, $1 equal to 10 yuan. I'm just giving you one example. Okay. Now what happens is it is made at 100 yuan, which is a good cost in terms of China. But when you bring it in America, it will cost you $10 as the cost. And $10 in terms of USA is cheaper because it's fine, right? Because if you have to buy something in hundreds, you will think about it. But if it's $10, it's all right. But now with weakening dollar, what will happen is again, I will add the tariff on it. First is the dollar, if it gets weakened, now the ratio will get changed. It may become $1.25 equals to 100 yuan. So the cost of the toy is still same, but the weakening of dollar will make it $12.50. So things will get expensive when you import them. So this is China. We are importing into China. When dollar is weakened, the price will get expensive. Now here, people's salaries will not increase in this ratio. So what they do, they will either keep it on hold or they will save it for a next month and then they will come and buy this. Okay. Now, other aspect, this is weakening of dollar. That yes, it will increase the inflation in your country. What will be the impact? It will increase the profits in this country. Because now instead of trading 100 yuan to $1, they are getting $1.25 back, which will increase their power, their profits, their margins. So exports are going to be better for China, imports are going to be worse for USA because it is going to increase the dollar prices. Now just add the flavor of tariff. Now this is 100% tariff example. This was 100 with 1.25. Now with 100, China is still manufacturing it at $100 yuan, which is 1.25. Now, what they need to do is they need to pay $100. Like, let's say this is Walmart, who's buying this toy. So Walmart was buying this at $12.50. Now, with 100%, it has to buy on the excise, which will become $22.50. No, 25. Okay. With this toy will have become extremely expensive. So the income has not changed, but the cost of this toy with additional tariff has become expensive. Now Walmart has to decide, does it pass on everything to the customer or it holds back? If it holds back, then it is killing its own margins. If it passes on, there may be less demand by the consumer. So all this leads to very bad economy. There is less demand, there's high inflation, and there's low growth because all these companies are going to, which is called as stagflation. And once the stagflation is done, it becomes deflation when there is no demand and there's no growth and inflation is not even there. It leads to stagflation. First, inflation leads to stagflation, and then it's deflation. Inflation is high growth, high prices. Stagflation, low growth, high prices. And here is high demand as well. Here it's like neutral demand. Deflation, low growth, low prices, low demand. This is much, much difficult to tackle than this thing. So when inflation comes in along with the weakening dollar as well as the yields going higher, this is where we will come. And that's why market is not liking it. Nobody likes the low growth. That's why all the tech sector is beaten. All right. I hope I'm able to give you a basic understanding of how the bonds and yields and these things work. If you have any questions, please put your questions in the chat. I will take that and then I will move on to the market levels. So I'm going to give like a couple of minutes to you guys because there may be a lag. So anybody who has any questions with respect to bonds, yields, and coupons and their impacts, gold I missed. So gold is usually a hedge against like weakening currency or weakening asset class. So what we do, gold is in USA, gold is not a thing against the dollar. So when dollar gets weaker, which is happening right now, gold gets stronger. Yields get higher, gold gets stronger. Economy gets lower, dollar gets higher. That's why you see dollar from 1900 to 3200 right now. This is based on all these things. With last administration or this, the gold has risen because it has seen that something is wrong here. Either the inflation, like what happened after COVID, there was a good amount of $9 trillion infused in the economy. So as they kept on buying the bonds, the money came into the market indirectly. And when the money came into the market, it increases or inflated the price of the asset class. Equities, one of the real estate, second. All right. So when those things happen, gold did not move. But once market realized that, yes, this is getting too inflated, gold started to pick up. I still remember in 2023, 2024, I said that there is a monthly cup and handle on gold. I can still show you on my chart. Let me just go and show you on chart. So GC, and I had a time frame which is for max, and I'm going to take monthly, make it favorite, and okay. So this is the cup and handle which I mentioned in 2023. I totally remember I have said this, it's there in the video as well, that this is the cup and handle which is getting ready right there, 2023, 20. Now, in 2023, 2020 period, there was COVID, and then as a result of COVID, it did not break out. But after the COVID impact was over in 2023, it started to break out. And once it break out, it never looked back. When I was saying around 1900 that the target is around 31, 3200, nobody was believing. And right now we are almost at all-time high, just a dollar or $2 below. And this is significant move. This is telling me that yes, there is some serious risk which is happening in the economy. Now, either something has to be dealt, somebody has to give up, either China gives up, either Japan gives up, either European Union or America, something has to give up. If they do not, then we are going into a cycle of very, very difficult economic crisis. As per my chart, this is the top we should see in the gold, around 32,400, 32,40, 32,50. Something has to be fixed. Something somewhere should come. Maybe we have an agreement with China, maybe we have something. It has to be there. Otherwise, it's going to break out. All right. So that was about gold. Let's go back to now dollar Dixie. Again, guys, if you have any questions, please feel free to ask. Because in live market, I'm at work. I do not have time to answer these things. So I want to make sure when I'm talking, you also understand in the sense that yes, what he's saying is right or not. So this is dollar sign symbol. Right now, it's trying to make a evening star or morning star right there. It has come down. It may make an attempt to go higher towards 101, 115, and then it will decide whether it wants to sustain here, whether these things break out or break down. On a daily candle, we are almost $2 away from the back test. Usually the EMS live with dollar signs. So in this case, there may be a possibility that yes, today we saw 99.70. It may kind of push it higher. But if dollar starts to weak further, yield starts to go down further, market will not be able to sustain it. For the last 2-3 days, market somehow managed. Yesterday, okay, let me see. Somebody is posting, hey Shane, hey Ike. Well, in the dollar is weakening on its own, with the yen versus also. Yes, you are right. If they start to sell those bonds, the yields will go higher, the dollar will get much weaker. And when that happens, it's like a cascading impact. The forces which are involved in that will be like are really serious to have a real war with America. Yep, it is going to be difficult for all the trading partners. But point is, China reliance on America. Japan's reliance on America. Somehow they are trying to get out of that US dollar. And if they do, that's also going to be really, really bad for America. That's why America is against all the BRIC nations. That's why America does not like to have any other thing than dollar. Now, if these countries start to collaborate and then come out with a plan that yes, they do not want to trade in US dollars, the demand of US dollars will start to get weak. And weakening dollar, I just explained, has a very cascading impact on the downside. So just be careful. If this thing gets ugly on the dollar side, China may be the winner, but euro is going to be definitely the loser. So it's going to have a very nasty impact. The inflation will just jump, and that's why if you see Jerome Powell was not inclined to do the rate cuts, because the moment the rate cuts are done, it will infuse the liquidity, and which will again add on to the inflation. Our salaries are not going higher, which can accommodate or address this inflation. So just be careful. If you do not want to trade, do not trade, watch it, and make sure you understand where you are going in. If you do not need capital for next 3-5 years, start investing like 10%, 20%, or maybe like start investing 5 spies a day, 10 spies a week, whatever you want. That's your cadence, but do not go all in at this time. If this thing unfolds, it's going to be really bad. Okay, nobody has any questions, so let me go to now some levels. So in the morning, I mentioned about uh 5360 area, right? This 5360 area was 5360, or it's now increased to 5393. So it is the 12 EMA, which is around 5394. Now, last time when we were discussing, we were around 5500, and then we had serious fall on the downside. And 4891 was my level where I said that yes, we could actually find a good base. If we clear that, we will bounce. 5008 was another one. And you can see we did not had any close below 5008, which is really, really important. And all these levels are levels from the past. I do not create them now. On the top, 5504 was a struggling area, which we tested. And in the morning today, we saw a big whipsaw on the downside. Now we almost came close in the afternoon, and right now in the future towards 5198. Now this is an important area, 261% of this cycle. It's a long-term cycle. If we lose this, I think there is a very high potential we come back and test 4891. If we hold it 5198, which is like almost 100, roughly 80, 90 points away, then I think we need to do a back test to the 12 EMA, which is 5393, and then make a decision. If we can go higher from it, yes, it will make sense. But if we cannot, then it's difficult. Now, one more important thing which I want to show you. Yesterday, we had some buying. We had this massive candle yesterday. Look at the volume of the candle. It's little more than the average, but it was nowhere near when we had big downside moves, which clearly indicates to me that yes, it was more of a short covering rather than actual buying happening. So short covering led to higher prices, quickly jumping 10, 20, 50 on ES like a blink of an eye. And this was pure short covering. Because if it was not short covering, we would have seen a follow-up buying, which I anticipated, and I got trapped in meta today. And that was a stupid trade by me. But right now, if you see, it has gone down. And I was looking at 5360 on a 30-minute chart, which was my chart throughout the day. Uh, this is 5360. Yeah, yeah. This is the breakdown area in the morning, 5360. Where I said it needs to clear this breakdown area. If it can clear this breakdown area, we will have some life. It tried multiple times to break this 34 EMA, but could not. Not even a single candle above. It attempted, failed, could not clear it. Right now, We are just below this area. Again, very important area. We see very simple thing. If you are novice in this technical analysis, very first thing, the red line is called 34 EMA, which is the average of last 34 candles, which this is red line. 12 EMA is the moving average of the last 12 candle. It is in the green line. Whenever the red line is above the green line, it means the sentiment is bearish, which is right now I have written here. And you can find all this code on Twitter. If it is the other way, the 12 line is above 34, it is bullish. Right now it is bearish. And whenever it is bearish, keep in mind that yes, if you are far away from the 12 EMA, like right here, you will love to go back and test it. Okay. And if you want, this will be a back test. And if you want to break out of it, or if you want to change the trend, or if you want to see the strength, you want 34 EMA to clear. If 34 EMA clears, it will go right here. So this is in the bearish market. This is where you buy. You do not buy here. You buy above here, or you buy here at this area or at this area. If you want to short, you short here with a stop loss of this and look for anything here or here. Right now, it is trying bearish market. It could not clear 34 EMA. Now you can take a trade around 5280. Keep a stop loss of 5300. And again, I always use 30 minutes, 15 minutes, and daily time frame. I do not go below than that. This is 5301. That should be a stop loss. Hold your shorts. If you start to lose 5275, which is the 12 EMA, it means the shorts are on. When the shorts are on, you just hold your position and wait. Another way of looking at this is convert your candles to Heikin-Ishi candles. Right now, Heikin-Ishi candle is telling me there's a flat base. Whenever you see a flat base, you need to be buying. But in this case, we are below the 34 EMA, below the 12 EMA, so I would refrain it. But in case if it was above, like once it clears this, I would be a very strong buyer. So if you do not know anything, just watch out whether this base is above these two lines or below these two lines. If it is below these two lines, like here, you go short, short, short. The moment the top is gone, you get out. It's a very, very simple way of trading if you have no idea whatsoever. You can set this up on your phone. Just three things: 12 EMA, 34 EMA, and Heikin-Ishi candle. If it is above, you go long. If it is below, you should go short. If you want to be more careful, go for 15 minutes. And in 15 minutes, you can clearly see right here, it told me to go short, 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 short. The moment it changes, you get out. So here you will also understand that yes, if you have to hold your position, how long you should hold. If you're on a daily time frame, you can increase that and hold your position. But 15 minutes is a reasonable time frame on a Heikin-Ishi candle. People use like 5 minutes, but that's too fast for me. So again, if this base clears up 34 EMA and hold, then it will be a buy. Right now, it's telling me that yes, it has captured 12 EMA. It is trying to buy above 34 EMA. So again, I'm just telling you all this because this will make your things easier. Now, if you go to a daily candle, you can clearly see there is no buy, no sell. It's making a dodgy. Right here, it was a short, 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 and exit. So right before yesterday's move, it was clearly telling the market you need to exit from the short position. There's no shorts. Yesterday, it was telling there's no short. It's the way. Yesterday was like, I'll just totally ignore it. It was a massive. Today, there was no long, no short. But because we got rejected from here, you just need to be careful. All right, so now I'm going to go to the levels. So I hope I clarified the very basics right now. So 12 EMA is negative, 34 is down. At this time, 5300 is really, really important. If we are not able to clear 5300, we have just tested the 12 EMA, we may slide towards 5198. If we do not hold 5198, there is a very high possibility we will test 5060, 5065. Okay, if we clear 5300, 5394 is something which needs to be taken out. If that taken out, there is a zone between 5500 to 5300 or 5400, which is going to be a very chop zone. With all this volatility, I think we are getting ready for a chop very, very soon. That's on the NQ. ES side, 5500 is for now is an area where I would like to see some level of resistance. Once we clear it, 5620 will be a positive target. Tomorrow we are going to have some banks number. The numbers will be good, but what will be their guidance? That is going to be really, really important at this time. NQ, exactly. If you see, I posted all these charts. If you remember, I used the mobile phone and post them. Again, 17243, which is really important. 17800, which is really important. 18700, it could not hold that. It's below that EMA and below that 261 Fibonacci. It's 5500 for ES and 18700. So either we have already have a back test. Either we clear this 18700 or we buy near 17800, where we tested like almost today. We went and hit the circuit around 17900. 18 or 17800 must be hold. If it does, then we can bounce. Or if you want to buy, make sure your stop loss is 18330, which is the high here. 18 18360, high here 18357. So 18300 roughly is your stop loss if you want to try an immediate long towards 18700, because that's like about 300 points, 2%. If you want to long, keep it here. Above this, you can go higher towards 19,000. But right now, 18700 is your 12 EMA or a Fibonacci level as well. So it should be a good area here. But keep in mind the bond yields, which is this TLT. TLT is turning bearish. You can clearly see it's bearish right now. 12 EMA has converted. It's away. There may be a possibility that yes, some bounce will come and take it higher, and otherwise it will come down and make a low. And if we look at the yields, I'll open up investing.com for the yields. And in between, let me also share the invite if anybody wants to come and talk. I'm sharing the link in the YouTube chat. If anyone of you wants to come and chat, we can very well chat on it. Just make sure you want to come. Okay. So for NK, TLT, I was opening investing.com. Investing.com is right there. If you do not know anything, just go to the bonds right here. You see the bond prices. This is the 4.91. This is a 30-year bond. meaning that at the end of 30 years, you're paying me with an interest rate of 4.9. At the end of 10 years, you're paying me with 4.46. So this is a coupon which has been decided. So every 6 months to 1 year, the interest from 4.4% will be rewarded to me. Over a 10 period, uh, it's like the payments are divided in fixed slices for 10 years in 6 month period or quarterly periods or annual periods. So this is rising, it's going higher, higher and higher. And if we can somebody give me the 10-year bond, TNX? That's a note. Uh, can someone give me the code for 10-year bonds? I can look into the chat. And I've shared the Zoom link. If nobody wants to join in, I can stop that. Because it's good to have a conversation, have a understanding from a different point of view. If you have something to add, uh, TNX CGI. Thanks, Simrit. This is interest. This is 10-year note. Okay. From 4.8, it's now 4.394. And it's getting it tested, the 34 EMA breakout, and now it's going higher. You can clearly see in the last few days, the risk has gone higher, almost from 3.9. And Mr. Trump was trying that, yes, this will stay lower, but instead it's going higher, 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 and higher. It's holding 34 EMA. If in next 2 days, if we see a crossover of 12 over 34, we can easily see 4.5, 4.6 very, very easily in terms of interest rates. So if you have anything else, I am actually done. I don't want to go to any tickets as such because the market is not like that. But whatever I wanted to convey, I shared. Anybody if wants to come, I've shared the link. You just need to click and join. If not, I'm pretty much done. Okay. Seems like nobody wants to talk. All right, guys, then. Thank you. Have a good night. I'll see you tomorrow. Bye bye.